Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down slightly here on the S&P, down about 0.4%. It looks like NASDAQ, semiconductor, and the small caps did get hit harder, about 1% or 1.7% down today. That was pretty much flat. Banks and the energy sector there slightly green. Transports down 0.5%. Biotech pretty much flat. Emerging market down about 1%. Grayscale Bitcoin is up close to 4%. Gold and silver and the miners, they did get hit much harder today. I think, last month or so, maybe month and a half, they've been making a huge move to the upside. I think this is the first time we're seeing metals seeing a heavier down day today. But I think overall they're still in that short to midterm uptrend development phase. So I wonder it's going to be recover sometime next week. We got the oil slightly green there. We got the dollars up a little bit. Treasury bonds down a little bit. VIX is down or up a little bit. Let's stick with the S&P Spider 65-minute chart here. So we got a little bit of conflicting information here on the spider here. Let's, what I'm going to do actually in this video, let's check out both because we got a conflicting information. So first of all, you can see that we have my short-term moving averages or average, they're now acting as resistance at least last 3 hours. Remember, my short-term moving average has been acting as support for several weeks here, right? 2 weeks or so or more. But when we saw that gap down, you can see that when you saw gap down and price quickly jumped, and we talked about this on the last night's update, right? Should there be any kind of shenanigan downside price action today, you want to watch out for this pivot, right? You can see that we came down, retested it, and then you can see that on the first hour, kind of high wave, dragonfly doji candle there, which has the bullish reversal properties with the follow through. And we definitely saw that follow through on the second hour and the third hour. But on the fourth hour, what happened was this gap was never filled. And I talked about it. I've been tweeting things out earlier this morning that this gap must be filled or things could get hectic here. Definitely, we got a little bit hectic in the last 3 hours or so. This gap wasn't filled and the short-term moving average is now acting as a resistance there. Right? So here, you can see the gap was never totally filled here. You can see that. So when the up gap is not fully filled, it's going to favor the opposing party. So in this case, when the bears brought it down, wasn't able to fill that bullish gap, so it's going to favor the buyers. And we saw that on the first, second, and third hour. Same thing happened here. Same logic applies here. We saw the gap down. Bulls got back up. Bulls were not able to fill that down gap, and it's going to favor the bears. So you can see that on the fourth hour, fifth hour, sixth hour, we saw that little bit of downturn. So we got a little bit of conflicting, information, a little bit of discrepancies here. What we are seeing is we're seeing the oscillator giving us that bullish signal while the price action is still giving us that lower highs and lower lows in the micro term. So I would say benefit of the doubt goes to sellers in the micro term. But you know what? I would have to say I'm more neutral in the short term, right? So you can see what I mean by that. This is a micro term sentiment. Definitely got lower highs and lower lows. So that's bearish. This is definitely a short term sentiment, which is neutral, right? Because you can see that in the short term, we just been zigzagging up and down pretty much this entire week, last 2 weeks or so, right? So definitely let's categorize this market in the short term neutral, right? Looks like more like a consolidation in the last couple of weeks. But are we bullish or bearish in the midterm, however? Well, we're bullish because you can see that we got these higher highs. That's a double bottom there. I think the market is trying to figure out where that higher low cultivation is it going to be. Is it going to be right here, or is it going to come down and fill this gap, and then is that going to be the higher low? We don't know, right? All we know is that this gap was not filled, and that's going to favor the buyers, right? So looking at that oscillator is actually is favoring the buyers as far as the momentum is concerned. And you have to understand, the oscillator, right? Oscillator doesn't account for gap downs or gap ups, and that's a good thing because oscillator is all about momentum, right? Because you could see a 1 hour or quick move. It's gonna take time to any kind of trend to be established. Sometimes take days or weeks and months, right? Days for micro term, weeks for the short term, and months for the midterm, right? Intermediate term, right? So this is a good thing that the oscillator is not gonna account for the gap down. It would have been much worse if we didn't see a gap down and we've really just seen that red candle. If we were seeing something like that, I believe the oscillator would have came back down. Right? If we saw that red candle, we'd be, the oscillator would be mopping the floor here somewhere in that vicinity. And that's what the bears want to see. The bears want to see the selling pressure continue and pushing it all the way to the downside. And by prematurely crossing like this, it's usually that signal actually favors a buyer's overall. Basically, what this oscillator is saying that is giving the benefit of the doubt to the buyers in the overall sentiment, which is the midterm, right? But obviously, in the micro term, we got the lower highs, and the oscillator does also have a lower high and lower high, lower high and lower lows, and this is why I drew that. I drew that that oscillator resistance. So for this trend to be fully affirmed to the upside, oscillator needs to get up and break above this resistance here, the oscillator resistance, the blue dotted line. By the time we see the oscillator getting above it, you will see the price hitting or closing this gap or gapping it over or thrusting above it, right? So regardless of what happens, first things first. If the bulls want to see higher prices and want to see new all-time highs above 422, bulls needs to get up and fill this gap. Best case scenario, obviously gapping it over so you don't even have to deal with the resistance because many times actually, when the gap gets filled, it's going to act as resistance. So 0.4, 0.5% gap up will make this transition so much smoother back to new all-time highs so that you don't even have to deal with this resistance there, right? Gapping about 0.4%, 0.5%, and then, target 422 and above and beyond. If we see something like that, in that process, it will reclaim the short term and then break above that down gap area, and that you will see the oscillator making a move to the upside, breaking above this resistance, and the uptrend could continue for another week or two. But if you're a bear, you're a seller here, you're going to see a downturn and more selling. You do want to see this thing continue lower. Make sure you protect this down gap. Make sure that short-term moving average continues to act as resistance. And at some point, you want to see this oscillator crossing back down like this right here and continue to cultivate lower. And I have to say though, because of these lower highs here, if this thing actually gets up here and start coming back down to the bottom of its band, things might get a little bit more hectic for the month of June. If we do see something like this, and bears can come down and fill this gap. Right? But as long as this gap remains open, I have to say overall, this gap, right? Do you see this gap? That gap is not closed. Remember that bears were not able to fill the entirety of that gap. As long as that gap remains open, I have to continue to give benefit of the doubt to the buyers in the overall picture. But for now, micro-term bearish, short-term neutral with the overall mid-term bullish sentiment. And we need the oscillator continue. Bulls need the oscillator continue to move higher and break above this level. And the bears needs to come back down and fill that gap from 416 and 414. So we have a clear battle area here, right? Bulls 420 above for continuation, bears 416 below to kill the momentum of this bullish momentum that has been built since because of this gap up. And because of this gap, we saw bounce as quickly in the first several hours. You guys enjoy the rest of this evening. I'll come back, we'll re-examine, we'll go from there, and good luck trading tomorrow.